All right, good morning or good afternoon, good evening, wherever you are in the world. I'm just going to talk about this MRNA trade that I opened up this morning, and it was based off of the daily time frame. And we have this bearish Wolfe wave set up, and I took the position when it was up actually 4%. So this morning, mRNA was up 4% at almost trading at 203, and then you can see that the previous candlestick it had resistance at 208, right? So within the first 30 minutes of the day, if something is trading up like 4% with no news, then most likely it's going to make a lower low. Okay, if there's news, then it's going to attempt a higher high. And 4% is quite a lot in one day. I mean, the average move, like if you just take a look at the trading day today, the average move on a good day would be about 4%. And if you ever see 4%, that's kind of like a warning sign of a potential pullback or like some pending news, right? So it could go either way. If there's good news, then 4% is justifiable. If there's no good news, then you better have a good reason to be holding that position. And we have some good reason to be doing the opposite, which is this bearish Wolfe wave on the daily time frame. And then using these moving averages like the 6, 8, and 21, these help with understanding where your support and target levels are. So here at 190. That blue line, which represents the 8-day moving average at 190.89, that's support for today after it moved up at 203 today. So as it went, when it was up like 4 or 5% this morning, my price objective into managing positions would be around that 6, the green dot at 194 to 190. So I opened up like 4 contracts at like 237, and then I closed off I think for like 3, let me check, closed off out of the 4 contracts, sorry, out of the 3 contracts, I closed off 2 contracts at 267, I believe. Sorry, 360. Okay, so then that kind of pays for that last contract. So right now what I'm trying to do is with that last contract is figure out whether this target here at 182 is going to work. And then not only that, there's also a Wolfe wave target at 165. So with the 190 puts, that means that the contracts could be worth at least $15 to $20 if it gets all the way down here, which is the 50-day moving average is at 163. Okay, so these you can kind of, when you have these moving averages and then you have the Wolfe wave giving you a bearish entry, the sentiment is pretty straightforward. It's like obviously you're going to be bearish unless it makes a higher high, which it has not. And then once it breaks through that support, then you got your next target to be 182, and then ultimately by the end of Friday 166. Now on the left hand side I have a 30-minute time frame, so you can clearly see that when you shift through time frames, you get a different picture, right, of what the markets are doing or how the trades are taking place on shorter time frames. So here you get this pullback, and then you have this moving average which represents the 200 moving average on a 30-minute time frame. So the 200-day moving average is here at 152. The 200 moving average on a 30-minute time frame is at 193. So that's kind of like acting like resistance with the double bottom from the pre-market activity, and that's showing a bullish Wolfe wave, right? So that bullish Wolfe wave, even though it triggered in the pre-market, it moved up to 202 and then a little bit over 203, and you can see that that's like a double top. Okay, so when you get that double top formation, and then knowing that like a move of 4% with no news is bad news, right? Like that's just kind of like how it works. Like good news is bad news and bad news is good news. Then you're not, and there's no TTM squeeze or those red dots indicating like the Bollinger Bands are contracting, which lead to expansion, right? There's none of that happening. So here you can see with the Bollinger Bands contracting back here and also back here, you get moves that expand those Bollinger Bands in one direction, up or down, right? And in a violent manner. So after this squeeze, the Bollinger Band started to expand in the south direction toward this target, and then again with no TTM squeeze, with no contraction whatsoever, it just bounced, right? So you have to understand, like you can't get like a big directional move if you don't have those Bollinger Bands working on your side, right? So the contraction part was not being modeled here. So you got this unusual bounce of 4% in the pre-market. So that's not good. And then on top of that, you got this bearish entry with a bearish Wolfe wave on the daily time frame, which is a higher time frame. So that higher time frame governs the trade of all the lower time frames. And of course, you can trade the lower time frames to scalp in and out of trades, but you're not looking for like a very big move unless there's a TTM squeeze or a previous gap that's just getting filled. So here, I think all the gaps got filled on the initial move back here, and then you got some warning signs with this doji, which traded red on Thursday. So the path of least resistance, when you turn on the Heikin-Ashi candle, it's been kind of trading. The momentum has shifted, right? So the momentum shifted significantly here. I think that day right here was a kicker where it closed way down here and then it opened way up here, and that set the tone for the next 2 or 3 days for all those who want to chase it. And then the chasing is over, and then now they're selling it off, taking profits probably down to my best guess would be the 21-day moving average at 183. But I'm hoping we get this one big move all the way down to 167, 160. That's going to be a $30 contract, but I'm thinking maybe $15 to $20 by Wednesday. Okay, so thank you very much and have a great day.